without further ado, I will present the next panel. It's a debate, bear markets, how funds adapt their investment strategy in market downturns. And we'll be hearing from Alexis, partner at XAnge, Alex, investment director at Binance Labs, Leeor, managing director of Spartan Group, Viktor, managing director of RockawayX, and will be moderated by Saalim, managing director for London at Techstars. So please give them a warm round of applause. Welcome them to the stage.
Good afternoon, Paris! Good afternoon! Ladies and gentlemen, and those of you watching live via streaming, hello. Hi, I'm Saalim Chowdhury. I'm the moderator for this panel today. When I'm not moderating panels, I do actually have a day job. I run Techstars in London, the most notable fun thing I've done in around the Web3 ecosystem is I had a small company called Axie Infinity in Vietnam go through one of my accelerators in 2018. And we are, I think, one of the larger Web3 investors in the accelerator space. But less about me. This is about our wonderful panel guests, and I'll let them all introduce themselves.
So hi, everyone. My name is Leeor Groen. It's a pleasure to be here with you all today in this beautiful venue. I'm a managing director at Spartan Group. Spartan Group is one of the leading venture investment firms, advisory groups, and deal makers in this space. We run a liquid hedge fund, 2 venture funds focus on DeFi and gaming metaverse, and active crypto M&A advisors. My notable point, I would say, is this is actually the 8th conference this year I've spoken out with Yatsu, and for some reason he's the headline act at everything, and I'm somehow on a panel. So pleasure to be here with you all, and I'm hoping that next time we'll be meeting together with Yat.
Hi everyone, so Alexis, I'm partner at XAnge, generalist European VC. Actually in 2014 we made a bet in the crypto space. We invested in seed in Ledger actually when it was supposed to finance terrorism, and so then we launched a dedicated strategy like a year ago where we got actually the first stamp from the IMF, the French regulatory, to invest in crypto. So that was a very first time in France, and it was announced 10 days ago. Happy to be here.
So my name is Viktor. I am managing RockawayX, $500 million across VC, liquid fund, which is a market-neutral credit fund, not like Spartan's directional. We are more risk-averse, I would say, but very friends, yeah? And
it's
and
VC,
then we have
we're all friends.
Yeah. We are all going to make it, don't forget. And we also have a large engineering division.
Hi everyone, my name is Alex. I'm an investment director at Binance Labs. Binance Labs is the investment arm of Binance. We've been around since 2018. Our portfolio comprises over 350 investments. Our most recent fund that we announced last year is $500 million. We've already been actively deploying from it. We've made over a dozen investments already. Our main focus is as early as possible. So we like when the founders come to us with founding team of 2 people and a pitch deck. We can invest as early as possible at pre-seed, seed, and Series A.
Also, I'll fight you for those startups. Right, so I'm trying to avoid making this being a boring panel. So people will be arguing with each other. There may be some people may get a bit grumpy with each other. Hopefully we won't start beating each other up. Although that I have seen that happen on some panels. But given that we're in a bear market, the question I'm going to ask, actually, before we go in, who are you guys? Hands up if you are an early stage founder. Hands up if you're a founder. Put your hands all the way up. Come on, all the way up. Stretch. I know it's the afternoon. Keep it all the way up. Right, how many of you are early, all the way up if you're still a founder, and keep your hand up if you are early, if you've raised, if your valuation's more than 3 million. Your valuation is more than 10 million. Whose valuation's more than 50 million? Whoa. Drinks on those guys. Awesome. Who else is in the room? Are you investors? Hands up if you're an investor. Excellent. Founders, Investors, keep your hands up. Founders, do you see the people you need to talk to? There you go, lovely. Any corporates? Big, evil corporations. Lovely, a couple of corporates. Lovely, lovely, lovely. Make friends with them, they can actually buy you out. So good, excellent, that's the room. So before we go any further, I always like asking some questions that people don't normally like talking about. So, gentlemen, I want to know how big yours is. Your fund, that is. Mine's out the gutter room. And also, how many deals have you done in the last 6 months? Because this is a panel on bear markets, so let's go for it.
So yeah, our fund is $500 million, and we've done over a dozen investments in the last 6 months.
Maybe let me ask you a controversial question, because I think everybody wants to know, like, in the current situation of Binance, so what's like the internal sentiment right now? Is CZ actually sitting on investment committees? Is he like also approving the deals? Give us, some, this is very confidential setting. Whatever we said here, nobody will know.
Or
so,
on the internet.
Yeah. so tell us, how is it currently being at Binance?
Hi, streaming.
So I can give you some insights with regards to Binance Labs. Obviously, we have a fund which we raised, announced, and it's fully up and running since last year. So we have the capital and the willingness to deploy it. We are sourcing as actively as ever. In fact, the bear market is when we make most of our returns. The best outliers that we have in our portfolio have been invested in the previous bear market. So we like sourcing deals in this environment because it allows us to really do a lot of great due diligence and really get to the bottom of what is going to drive the next wave of innovation in the space. With regards to your second question, like how our internal process works, well, first of all, I'd like to emphasize that we are very privileged as Binance, having the deal flow that we have and having the founders wanting to talk to us. So we really apply a lot of thoroughness and thoughtfulness in the way we approach to evaluate every single investment. And that goes all the way from the sourcing to the execution, to the approval, the investment committee, and the execution of the deal. So the way our internal investment process is decided is very consensus-driven. Just like you have, it's a feature of blockchain, I guess. So our investment committee has a vote, and if you get majority votes from that investment committee, then you get the investment. We do not have one single kind of point of decision-making for our investments.
Okay, yeah, that makes a lot of sense. And I would say, like, we are very grateful for Binance to be around. There is a rumor that, after, recent SEC trading volume of Binance decreased 75%. I looked up just right now. Actually, the trading volume run rate this month is $400 billion. It's the same pretty much as last month, $440 billion. Same as December 2020. We look kind of at these like 3-4 year cycles, which was also at $500 billion. Peak was at $4 trillion, sorry. So we're like 90% down from the peak, but still much higher than in 2018-19. Binance has been instrumental for this market to grow.
Awesome. Right, so back to the question.
Yeah, sorry.
It's okay. We're all curious about Binance. But assets, fund size and number of deals in the last 6 months.
So we managed $500 million, 6 months, 10 deals, 4 funds, 6 direct investments.
So I'm not like you guys because I'm a generalist VC actually launching a dedicated strategy. So no deals in the past 6 months actually, 2 in the pipe these days, very early stage seed, and so yeah, we will have the dedicated fund probably next month.
So we manage $500 million in assets as well across both the liquid hedge fund as well as our venture strategies. We did a final close of our most recent venture fund in December 2022, which was, I guess, just within the 6-month range. We've done about just over 10 investments this year across a combination of direct equity token, SAFT, as well as secondary deals that we're looking at increasingly.
Awesome. On my side, last 6 months, we did 24. So me, 24 deals, of which 14 were Web3. And I'm a generalist investor. We have $1 billion-ish, I think, AUM. So yeah, but we do lots of deals. We did about 750 odd last year, a generalist. So I like scale.
So you are slowing down versus last year, yeah?
Oh, no, that was just
Run
me
rate.
personally. No, we're actually
okay.
up from last year. So globally at Techstars, so as a managing director, I will do on average 24 deals in a year. It's just so because in the last 6 months we had 2 batches that overlapped, hence why within the 6-month time frame. But each MD does around about 24 deals a year,
Okay.
and there are about 35 of me.
Is it the same as me? I mean, like, I'm a generalist VC, so my Web3 deal are competing with other topics. So recently we've done maybe 10 investments, but all in climate or cybersecurity. And now we are in second position for the Web3.
I mean, what we're really talking about is this is the thing. As Web3, particularly in this bear market, evolves, and as we'll inevitably talk later in the things, like one of the things I think we're all in agreement of is that what is Web3? Web3 is not Web3 alone. It's always Web3 plus X or X plus Web3. It's never just one. And so, or maybe it is. Should it be? That'll be a good question for us to go into. So, but before we go into that, so people call it a bear market. Is it furry or is it grizzly? How do you define the bear market? So like in the context of crypto assets.
I think I would be the risk-averse guy, actually. So it's funny for VC, but like we are software guys, so we tend to look at 5 to 10 years. Our investment thesis is tech for the 99%, so it's not for the expert, actually. So we will shoot for, fidelity program, infrastructure play, obviously, or, payments that will flow into corporates. So my appreciation of the situation would be we back talents, actually. So,
but defining the bear market, how do you define the bear market right now?
like in my position, it's Web3 being less volume, like less inflation, obviously, but all the good teams are still building products and standing still.
I would say it's massively bear. It's a grizzly plus plus. If I compare 2018, like the sentiment is really low. We were just recently in Bitcoin Miami, like there is no WAGMI, like no like we are all gonna make it, sentiment among people. I remember 2018.
Wait, Victor, are you saying here at Proof of Talk that WAGMI is dead?
I'm not feeling that sentiment of we are all gonna make it. Like there is a lot of depression going around in the market, but also from institutional investors, yeah? So we spoke to some asset managers here, like traditional people are not allocating to crypto. If I speak to like some of our LPs, they're like, don't bring crypto to investment committee now. It's a bad word, yeah? So the sentiment is really low. However, like if you look like on Traction, yeah, we have 130 billion of stablecoins out there. In December 2020, before the bull market, we had 25. So, that's like 5x. Then what total value locked in DeFi. Like there is actually NFTs trading volume, 1 billion per month, Blur additional 1 billion. So there are definitely use cases and traction, but the sentiment is very low. You go to a party, Miami, like club owners were actually struggling because, crypto people were not buying bottle service anymore, yeah? So, and it reminds me of 2018 bear market when in San Francisco Blockchain Week, there was nobody but 2 engineers dancing in a nightclub. So I think just the sentiment needs to come back up.
Interesting. Does anybody else believe WAGMI is dead? Is WAGMI dead? That really should be the title of this panel.
So I'll weigh in. Unfortunately, I'm going to have to agree with Victor here, despite the shots fired earlier. I think the sentiment and the rate at which people are engaging with the industry has just fundamentally changed, right? And the main catalyst for that, what I would categorize is in 2018-19, in the last cycle, people were new to this sector. It was a first time of material wealth transfer to a group of people who had invested in a new technology sector, right? And that was an exciting period to be a part of it. Whereas in this last cycle, people had a lot more to lose. So, I mean, markets down 60, 70% off its peaks. People can feel that a lot more than they did at the time because there was a relative loss and a relative gap that was much larger. So I think nowadays, the people who have come in at the peak of the market, let's call it H2 2021, and are now looking at and evaluating the fundamentals of crypto, seeing how many bad actors have come through and tainted the reputation of the industry, how much SEC enforcement is happening in the US and globally, frankly. That's creating a perfect storm for us to be less excited about a future of an industry. But if you take a level deeper analysis of what is possible in this space, why has it been so robust over the last 13, 14 years, and what is the future prospect of it, I would argue that there is nothing more exciting, no sector more exciting than the combination of Web3 fundamentals coupled with other emerging technological sectors.
Actually, I don't care about the financial market once again. I care about the long-term adoption. And great people got hired in the real economy working on Web3 actually. So now if you want to go at CAC 40 or listed company, you will have innovation team, and they didn't get fired basically. They are still working on it a bit slower maybe, but they are still there. So this is why I'm confident that it will go back actually.
Yeah, I think it's a good point to finish on a positive note. Yeah, so. We've been through such a shit show over the past 18 months, and the market, crypto, is still around. And it's not really reacting to negative news, yeah? SEC, what they did, to Coinbase and Binance, and, we got maybe some percentages hit on, Bitcoin, Ethereum. Of course, Polygon went down a bit, and Solana went down a bit because now there might be considered securities, whatever. But, for me, it feels like the bottom has been hit, because the market does not react to negative news anymore, but the builders are there. Let's remember, Uniswap was created in 2018, Compound 2018. So we just need these new projects to come up and drive the new narratives.
So I'm actually with you on the bull case. So I do believe WAGMI is still there. I don't think WAGMI is dead, but it's a new form of WAGMI. And I think one of the really interesting things that we're seeing, certainly from what I see, the joy of Techstars, we get literally 1,800 applications to 12 places in my program. And so what we're seeing is this wonderful joy of people coming new and fresh blood to Web3. They're the old Web2 brigade, but they're I smell something interesting. And they're the ones who I actually think are actually driving the force forward. And so what we're seeing is these newer companies, they're getting capital, but they're not raising from the Web3 sources, they're raising from the Web2 sources. And so it's really interesting. So we're definitely in a horrible bear market, but are we going to make it? I actually think we may be in a really interesting place because new people adopting it, new fresh power, dare I say it, people have to put their money somewhere. Being clear, well, how do we get out of the last recession? People just got bored of sitting on money waiting, and the money's starting to be deployed. So, but I do think it's a new era, a new type of people, and it's the old Web3 plus the new emergence coming together. This actually comes down to what do we look for in good investments now? And I think one thing, Viktor and I, Viktor, you very rightly said, it's you're tired of infra.
Yeah, so we just organized Gateway to Cosmos conference, which is one of the largest Cosmos conferences. It was 100% infrastructure again. And I think the engineers, I think it's too easy to do infra, because you just kind of compete with your friends, who is smarter on the new folding scheme to use, but
I can complete a transaction faster with a slightly lower gassing.
Yeah. And I think, it's intellectual stimulating, but I think it's too easy to just do another infra. Where it's complicated, it's to get new users. And nobody in the Gateway to Cosmos, and I gave them directly feedback, the video is up there, everybody can watch it. I gave them use cases they should be targeting. And I think same thing should happen also in Ethereum and also Solana is actually pretty good targeting use cases, yeah? Very heavy on NFTs, now doing NFT hackathon. I think Solana is probably the chain which understands it the most.
Interesting. Anybody else want to join in on the use case game?
Once again, so you can bet on visionary founders, obviously But now you need somehow market validation and quicker, because we are financing companies losing money basically, so they will need to get refinanced. So either you go like a very early stage, obviously betting on the long run. Either now you need to either monetize, before you were able to say yes to someone that only has user but no money.
So what is the signal you're looking for now? Victor's looking for use cases. What are you looking for?
Monetization, not
actually making some cash.
Exactly. Not only usage, but also monetization, obviously. Or I will look for people replicating success in Web3 to in Web2, from Web2 to Web3 use cases, basically.
Awesome. Sorry, we've been quiet.
Yeah, so I'd like to disagree.
Thank you.
We like infra. We like it a lot. So we're quite agnostic when it comes to the sector, but we start off from the foundational part and try and build up. Some of the use cases that I think you have in mind are great, but you cannot build them properly without the infrastructure in place. So, for example, on Cosmos side, they tend to attract a lot of infra builders because that's how the community shaped up. Once kind of that matures, and I think they've been doing a lot of great things, then the use cases will come. And I think that's a feature of various ecosystems. You mentioned Solana as well. I think they are all different at different stages of what they're trying to build, what vision they're trying to deliver. So I think generally, I wouldn't apply one label for everyone. I think every single ecosystem has their own kind of infrastructure needs, their infrastructure vision, and we tend to look across all of them. So coming from a sector agnostic and ecosystem or chain agnostic approach allows you to be that kind of flexible across the bull market as well as the bear market, and that's what we do.
Oh! I think Victor wants to fight back. Come on, Victor! Knock that punch.
I think, let me respectfully disagree. Ooh. So how I look at blockchains is, blockchains are trains leaving a train station. And I look at how full are those trains. We call it block space. Block space right now is empty. Maybe Ethereum, sometimes, whenever there's a meme coin, it gets full, the trains are full. But, I look at Solana, I look at Avalanche, I look, at Aptos, recently launched, I look at, the layer 2s. Of course, Arbitrum, has right now traction because, people are thinking that there will be airdrops. So, but the block space in general is empty. The trains leaving the train station have space. There are free seats. So therefore, I think we should have more people building use cases so that, the trains go into interesting destinations, so that actually those trains get full versus, just kind of competing with my friends, who is smarter in another ZK technology.
But my ZK technology is better than yours, and damn right, it's better than yours. Yeah. I'll have to teach you, but I'll have to charge you lower gas fees.
Yeah, and then
which is obviously Khalees's
Saalim,
version.
Make sure you post it on Twitter so that your friends could also retweet, and then you get some ego stimulation that you are the smartest person in the room.
I mean, that is literally what we're all venture capitalists and builders for. As a developer, that's literally what I got out of bed for in the morning. I didn't. Okay, Leeor, do you have a view on what you should be looking for? Do you think should the trains be fuller? Should there be more passengers? Do we need more rails? Or in fact, should we be abandoning trains and building hyperloops to extend that metaphor?
Thank you.
I think that this is really the topic that we tend to get into the holding pattern of at every crypto conference you're at, where people are talking about, what is the latest, greatest innovation sector, which layer 1 or layer 2 solution is the right one to scale this technology to the next, million users, billion users, whatever level of ambition you have. And this is where I fundamentally have the problem, because the challenges that the industry face today are not about the people in this room, right? I mean, we're all here at a crypto conference already, watching a crypto conference online and streaming into it. It's about what is the rest of the world doing? And back to your topic of what is the definition of a bear market, I think that's really where we struggle, is the level of enthusiasm and momentum. So the number of trains leaving, right, is all-time high. Everyone wants to have a train, be on the train, and we're drinking that Kool-Aid. It's the other people watching, what is this train technology happening in this space and what's it being used for, i.e. what are the destinations that these trains are going to? I think that's really the fundamental question that we're still struggling as an industry to coherently answer, and those are the holes that, in the case or at the moment of the SEC with Gary Gensler, they're picking at, right? And I think that this is some of the challenges we face. So acknowledging that it's not about how many trains or what the destination is within the crypto community, it's what are the applications and why are we doing what we're doing to the rest of the world. And a very personal experience of why I got into this space. I mean, I've been full-time dedicated to this industry since 2016, bought my first Bitcoins in 2015, passionate about the idea of decentralization and a financial system that exists outside of the central banking system in the world. And I think many people share that view, common kind of understanding of what that represents and the potential that that has. But when we start talking about which train is it and how full is it, these are the metrics that we're looking at ourselves. The real question is, how many people are using this for a better purpose or a better use of a transfer of value, which is the core principle here. And I think that that's where, to be frank, my definition of a bear market is we can build all the infrastructure we want in the world. If there's no use cases actually using that for a better purpose, we're still going to struggle and be having these same holding patterns of cyclical behavior of speculation within a market rather than actually building things that are value adding.
Awesome. Yeah. So I'm going to, sorry.
No, but actually, we are trying to go back to basics, why this technology could be useful for the existing guys. So why is it cool to own an asset in-game when I'm a hardcore gamer and I want to exchange stuff? How can I replace a plastic loyalty card for the supermarket? How can I get reimbursed automatically if my plane is late? And we are looking at that type of use case, and then the infrastructure also. But now we want to dig for the the 99%. Once again,
Excellent. So taking this conversation and changing the track, because we've had a really good conversation about where things are going. Let's point no rail puns, no. Wrong audience, right? British humour never really translates across the channel, does it? Although I blame our politicians for our perception in this market quite a bit. Look, may not have been on the original topic of agenda, but we've had that magic word, those 3 letters that spell fear in the heart of crypto investors. SEC. Come on, that's how you have to say it, right? And so, obviously, the SEC says we've all been investing in things that that have been unregulated, and we're all in trouble now. And I can completely understand if Alex has to recuse himself for part of this conversation. But
I think we should start there, actually. That's it.
So, Alex, no, obviously, it's been really interesting. Andreessen coming to London, yeah. Obviously, Team London here. The joy of having a businessman running the country rather than a politician. SEC, everything's changing. We're in a bear market. Will the regulators actually help us, or will they try and screw us over?
I think
Alex from Binance, come on.
From our perspective, nothing has changed in terms of our approach to investing. We are as active as ever, and as eager to deploy capital as ever. I think, to answer your question, whether regulators will help us or not, I think it depends on the regulators. If we have clear regulation, definitely a massive help. If not, then not. So we want to be on the right side of the regulation, and I think pretty much everyone would agree that clear regulation is only beneficial to the industry.
Regarding regulation, I would say if we once again take a step back, I think that back in the days the whole blockchain technology was about being anonymous and free, but I don't think that this world can be stabilized and run without the state. And for a state to operate, they need taxes and stuff like that. And so we need to be the blockchain to be regulated, so actually the state can keep running basically. And
so you think it's going to help?
Progressively, yeah. Otherwise, it's civil war, basically. You know, they need tax, they need money to run the state, and so like they won't let it go. Like, but they're right. At some point, like we
Leeor,
can.
do you think it's going to help us, or do you think it's going to get us out of the spare market?
So, I mean, for us, Spartan Group, right, we're based out of Asia, so we have our offices in Hong Kong and Singapore, and we've been on that journey with China, right? I mean, our main office is in Hong Kong, and as a result of exactly what happened 3 years ago with basically China saying, we're no longer participating in this, we don't want to be a part of it, you're not allowed to do this here, that obviously created a whole wave of opportunities globally when miners, frankly, to begin with, as well as many projects were moving globally. I think the counter side of this is what the US is doing now is they're basically giving that window of opportunity for everyone else to come in and say, okay, what are we doing here? Why are we doing it? I think for anyone who's in this room, you believe that this industry has a useful life longer than 2 or 3 years. So you kind of have to believe that it will get resolved and sorted. And Coinbase has some good lawyers. I'm sure Binance does as well, right? So they'll be fine one way or another. They'll reach a settlement. They'll resolve issues in whatever the way needs to be. And we'll continue moving on within the laws and rules that they've dictated at that time. The nature of this industry, though, and why it's so relevant and interesting, and we have conferences all over the world, which brings people together to meet and talk about it, is because it is so global in nature. And I think there's been many attempts at many stages to do things like global taxation. Obviously, the US does that on its citizens, but for everything else, I mean, these ideas of global standard corporate taxation, I mean, these things have fell flat for so many reasons. So when I look at the inverse of that is, what is the world, right, the system, which I would argue that we're complementing, not fighting against. We're complementing and enabling. What do they want to do in this space? For them to reach a meaningful conclusion to that question, we are years away, right? So what are the opportunity sets in the meantime? Regulation will be an enabler of this sector. However, we're not going to wake up in the next 2 years and have global standardized.
So regulation isn't going to get us out of this bear market.
It's a longer story.
Come on, Viktor, you must have a more controversial point.
I have a different perspective. I think SEC has a big problem. Like, we calculated, $40 billion was lost because of fraud over the past 18 months. And the market cap declined from 3 trillion to 1 trillion. So 2 trillions of value evaporated. Which means who was hit was the retail investor. What is the main mission of SEC is to protect the retail investor. So they are in a big problem. And they are doing exactly the same thing which they did in 2001. They overdo it. They are going right now after, they cannot go after 11,000 listed tokens. So they go after centralized entities, broker-dealers, exchanges. And I just think it's going to take time. And we were, with Liba, my colleague here, we were discussing over the past 2 days with like experts from the US, and it's going to take time, because it has to play out in court. But it's a great opportunity for us in Europe, because someone can take the bull by horns and can be proactive. UK is a great example. I think France as well. I think there are other countries. I hope Czech Republic could be also one of them. Switzerland definitely. Look, we released a report called State of European Crypto. You should look at it. From 2013, 11,000 crypto startups were created, most of them in Europe. So if actually already historically were relatively big, but then, US took over, especially in the later stage, but we have a great opportunity here.
It's interesting, this narrative of we screwed up, which is, forgive me, if I was to transliterate what you're saying, the SEC kind of screwed up by...
Absolutely, yeah.
But they thought fraud versus value, and now they're trying to play catch up. Whereas in many ways, countries that are like, this is the world where it is today, let's make it work.
Plus, there is politics. So there is a bit like,
Politics and the SEC and regulators?
Yeah, like Democrats versus Republicans.
Oh, yeah.
And, 1.5 years until the new presidential elections.
I mean...
But still, it will take time until, those agree. So we are in for a long time in the US, I think.
You're thinking of partisan agreement in the US politics? I think that's something we all hope for and aspire. Moving on, what's really interesting is that
before we do, I'll come controversial counterpoint. I actually don't think it's the $40 billion or whatever the number is of fraud in this sector that's a key driver of this, because in the scheme of things, that's almost it's insignificant and immaterial, given the widespread ability of manipulation that happens in day-to-day life and society outside of crypto, right? So of all the things that the Securities and Exchange Commission can target, this is one of them, and they're doing things, and to their credit, they're doing what they believe needs to be done to clean it up. But if you look at time and again, recoverable assets, whenever there are things, I mean, it's gold and cash that disappears, crypto, tokens, Bitcoin, etc. is always recoverable given the ability to identify it, 99% of the cases. And I look at, I mean, for me, the prime example, I mean, I look at the Swiss franc. I mean, 50% of Swiss francs, call it the circulating supply of the central bank, National Bank of Switzerland issued currency, is kept in 1,000 franc bills. Now, the euro discontinued the 500 franc euro bill, but at some point someone has to explain to me, what are people doing with 1,000 franc notes, right? And this idea of what cash is being used for, what other assets are being used for, there are challenges in society and there are bad actors and financial criminals. That is a fact, that's a period. Are there disproportionately more happening in crypto? Potentially, yes. Are the size of those significant for us to warrant the level of crackdown that we're having now? Potentially not. Is this an opportunity to do other things and create a bigger uncertainty over a sector? And that's probably where I see this is, these are necessary steps and actions being taken to things that can be controlled, which is actually a positive thing. The fact that we can track and trace and understand where money flows are happening, how it's happening, why it's happening, that's an incredibly positive development in the progression of the financial system and the way in which money is tracked and traced, and ultimately financial fraud is mitigated.
Inevitably, I have to give a shout out to two Techstars companies, Chainalysis and Asset Reality, who've been powering most of these. Powered backed by Techstars. Anyway, moving swiftly on, one thing that comes time and time again here is in the past, and the one thing, I love the crypto world, being very clear. I love the Web3 world. It has made me very, very wealthy. But, it's made all of us quite wealthy, I'm sure. But one of the challenges is, there's this almost a belief of, but it's Web2 stuff. It doesn't apply to us. But I think everybody here has got a bit of gray hair and has been around the block a little bit.
Whoa. Speak for yourself.
Hi, I'm Saalim. I'm in the 40+ club. I wish there were more people like me in Web3 stuff. I'm all on my own. Anyway, moving swiftly on. But we've all seen past systems, right? We've past failures, past bull runs, past booms and busts. What are the real lessons we need to learn? And we need to because this is really an audience of founders, to be quite frank and honest. Like, what do they need to learn from the past? What lessons have you seen from the past that you think that they're likely they can actually learn and take advantage of right now to help them thrive in this bear market? As I firmly believe we're actually on the press up and we're going into a bull.
Actually, it's like, don't always chase the odd thing. Like, obviously, like infra are like oversubscribed like most of the time for odd deals. But like, I've made an update like 2 weeks ago for a company building a lending protocol for NFTs. And seriously, like, who would bet on NFTs these days? And actually, we should look at 5 years. Like, if everything goes back, if consumers are back in the market, it will go up. You will need lending. We might not need it, but at least it would be used. And so I think you should keep track of what would go up again, like if everything is going back to normal, basically.
Yeah, I would say, do not do it for the money. You will lose. And I've seen it time and time again. I remember like some projects around Solana in 2021 November. You were there, no, at Breakpoint in Lisbon. Like, they were going with like off-white T-shirts, walking around. One T-shirt is, I don't know, maybe $1,000. Like, it became such a show-off culture. Like, so, and not only Ethereum, same thing, and Avalanche, same thing. And then I remember in Bahamas, the FTX crypto conference, 2022, I think it was in April. Yeah, you had like Algorand was shielded everywhere. So if you are in for the money, you will lose because you will think you are a rock star when the next bull market hits, but then you will double down like Three Arrows Capital did, yeah, like Kyle Davies and Suzu, like they double down, and basically this ego driven by money kills you. So have a larger mission than that.
Yeah, I agree. I think motivation is the #1 factor that you should always prioritize, and that's what we do as part of our due diligence, is actually get to the bottom of like what motivates the founders to be building what they're building. Motivation changes during bull markets, as you said. Primarily, the primary incentive for a lot of the founders that one can see in the bull market is monetary. In a bear market, is the opposite. Is we're in for the tech, and hopefully that kind of comes across all the time, and only the right actors stay behind. And this is a good feature of a bear market. Actually flushes out the bad motivation, the wrong incentives, and only really the great founders stay on to build the next wave of great startups.
I think we've perfectly captured it already. Leave it there.
Any more? So, lessons from the past. #1. So I actually disagree. It's not even, so not just, so I disagree, but I don't. Money, don't chase it, agreed. Tech, in the bear market becomes tech. I'm not sure, so it's always about people. And this is the thing, to Victor's point about use cases, like one of the biggest problems right now in the Web3 world is nobody cares about the user. Genuinely, like the old test, like the interfaces are horrid. It's about as easy to use as trying to, most things in the Web3 world, especially decentralized stuff, DeFi is the worst. Like, it's harder to use than programming a VCR from the 1980s. Those of you old enough to remember what a VCR is, or the fact that you had to program them. And I think this is one of the things. We always forget about the human and the people component.
So shall we talk about the use cases that we are all as investors excited about?
Oh, hell yes. Yes, so we have 3 minutes. So I'm going to do a whistle stop, 2 use cases that you like in under 15 seconds. Go!
So I focus a lot on DeFi. I think there's a
use cases. DeFi is not a use case.
Yeah, so getting there.
Faster.
No, slow.
Okay, so borrowing and lending is an interesting use case that's evolving. So for now, most of the borrowing and lending done in crypto is over-collateralized. In TradFi, by far, most of it is under or no collateral, really. So I think under-collateralized lending is an interesting use case that I'm excited about in crypto.
So I would say payments for niche applications. We invested recently into Helio. It's, payments on-chain for NFT premints. They launched in January, 7 million already processed. Amazing team.
Excellent firm. I may have backed them, and I may have built a startup with that team.
Yeah, you are a smart investor, I can tell. And second is Playmakers. It's a French company doing user-generated content publishing. So actually, historically, all the games are kind of modifications of other games. Counter-Strike is a mod of Half-Life. Artists are not monetized. Through blockchain, you as an artist, you can publish a modification of a game, and then if it's used, you get paid. Amazing.
I'm chasing the CFO stack for, how will I make payment flow, like in businesses, basically, transaction and accounting. And secondly, it would be data provider, for instance, the equivalent of Keiko, but for DeFi.
Cool. Yeah, I think all of the same. I mean, what I would categorize the CFO stack is the composability of liquidity. I think that's still the holy grail of use cases here. Once you have a dollar or a version of value online, what can you do with it, right? I think that should be fully flexible, movable into everything. And there are a lot of things that enable that, lending, etc. But the idea of a smart contract enabled decentralized architecture, that's still the holy grail of what we're chasing. There's a lot of people building various aspects of that. And then the other side of it is really the use case for digital asset ownership. So what you have when you own an in-game app or in-game asset and what you can do with that. But You've got to give me more than 15 seconds for that.
So 2 companies out of my last batch that I think are really interesting. One is Aware. They are building probably, it sounds anti-Web3, but it's a semantic layer that allows you to take data from blockchains and actually incorporate them in LLMs. Because we've successfully avoided talking about AI. Well done, everybody. Woo!
You had to go and ruin it now.
I know, that's my job. I have to go and spoil it all. But yes, so that's, sorry?
And nobody said infra. Nobody said infrastructure.
Except for you.
That's so cool.
We'll have to continue the panel without you if you'd please leave the stage.
Thanks. Well, and then lastly, another company that I think is really exciting, oddly, is a company called Combat IQ. They're actually vision learning, but they are showing data on sports events, but they're making it transparent through blockchains. What's really interesting is, and I think we're all very much in agreement here, the future of Web3 companies that are going to pull out of this bear market are ones with good use cases, but use cases that don't need to use any of the swear words. DeFi. They don't need to use the word blockchain. They don't need to talk about tokenization because the impact that they have is so obvious for the customer that they don't need to tell the customer that it's on a Web3 rail. Ladies and gentlemen, thank you very much for joining us today. I'd like to thank our panelists. Give it up for Alexis, Alex, Leeor, Viktor. I've been Saalim Chowdhury from Techstars. Thank you very much.
Thank you, everyone.
Thank you.